All right, you go with the downside view today, but one stock which is holding fairly well in pre-open is Trent. Did well over the last few days and now is holding up with a gain of almost 2%. Good numbers coming in. Alongside that, we had the bonus and the fundraise plan that the company has announced as well. Abneesh Roy, the executive director, Nuvama Institutional Equities, joins in now. Abneesh, what do you make of the Trent numbers? There was a margin surprise, but at the same time, the management cautioned the street with near-term inflationary pressures as well. So give and take all of that, what is your reading of the number and what the stock is likely to do after the rally that it's seen, but still off its highs?
Sure. Good morning. Thanks for having me. Yes, I think the worst seems behind for Trent. Yes, the overall revenue growth of 20%, I think going ahead also there is a good visibility aided by some of the price hikes, at least in the Star Bazaar part of the business, which will happen because FMCG will take that hike. And core business also is doing well. The margin surprise was there. You're absolutely right. In terms of the discretionary, I think post-election, the petrol price hike will come and that will put pressure on a lot of the demand side for many consumer categories. I think the discretionary category could see slightly more pressure versus staples in terms of the outlook because of the petrol price hike, which is, I think, imminent post the elections. But if I combine everything, the worst seems behind for the stock, the bonus issue and clearly the rights issue, etc. And plus 20% plus revenue growth is not bad at all. So yes, valuation has come off. That also is supportive. But in the current scenario, we'll prefer Titan, V-Mart, Page, etc. in that space. But Trent also clearly worst is behind.
All right. Would you have a call on all the others? We have an update from D-Mart, 19% revenue growth out there. Trent obviously 20%, V-Mart 24.5%, Titan and Kalyan obviously a lot higher because of gold prices. You said you like Titan, you like Page, you like V-Mart. What's your call on D-Mart?
Absolutely. D-Mart is a very good compounding story. Now they've gone into big markets like Uttar Pradesh in terms of store expansion. Clearly very strong surprise they delivered in March quarter. We were expecting that because generally store expansion picks up in Q4. So definitely the price hike in FMCG is always supportive for D-Mart because they have a big staples business within their stores. So yeah, D-Mart also clearly worst is behind and it is a stock which we definitely like. It is always expensive, but from an overall perspective, between D-Mart and Trent, we'll prefer D-Mart. But Trent also worst is behind. D-Mart clearly is going towards a higher trajectory of growth because of the new markets and FMCG price hikes which will come into its stores also.
I'm curious to know the investor sentiment around staples right now because the analyst sentiment seems to be turning a little bit. Everyone's, looking at better prospects ahead. The price has turned as well. But investors were looking away from this space for the last 18 to 24 months, largely because of underperformance, growth-related concerns, and better opportunities for investment as well. But right now, with the market sentiment being what it is, do you think with the kind of conversations that you have with the buy side and the other investors, is the sentiment moving towards staples or people are still looking at discretionary?
Very good question, Mangalam. In fact, if you remember last 2-3 quarters, whichever FMCG results used to be next day, people were quite confident that the stock could correct post that. Now I think we have completely come the other way around. So we are seeing that next week also, if you see Hindustan Unilever results, AWL Agri and Varun Beverage results are there. We do see that in most cases, the results will either meet expectation or beat expectation. So yes, we are seeing a recovery in FMCG because of the GST rate cut, because of the overall GST benefit government has given 45,000 crore. So investors are appreciating this. And if you see then other sectors like IT, yesterday we saw HCL Tech down 9-10%. So yes, there is a sector rotation which is clearly helping. So I would expect that this is an under-owned sector and going ahead in Q4 also generally the numbers will be decent by most companies. Summer categories will be weak. So Imami will be weak, United Breweries, can shortage and weak season in Q4 and ITC weak because of the cigarette tax side. So those three will be on the weaker side. But in most of the other companies, the numbers will be better than what we have seen last few quarters. Now, coming to the outlook, if you see, price hikes are definitely happening across the board. We have seen price hike. Yesterday, Reckitt Benckiser India numbers have come. They are not listed in India, but they are saying that double-digit sales growth in India has happened because of the overall industry doing well. So that's, I think, positive for Hindustan Unilever, Godrej Consumer also. So yes, we are seeing sector rotation in favor of FMCG. Price hikes will happen. Q1 will see margin pressure, but I think investors will see the overall bigger picture of medium term rather than just Q1. But Q1 price hikes will definitely happen across the board of 3 to 4% at least in FMCG.
These are, Abneesh, hi, morning. These are just, I mean, post earnings as you described it, right? How the mood is turned. These are kind of trading moves, or you think you can sort of buy and hold them now? I mean, is this, could be meaningful, right? I mean, 5-10%. I'm not scoffing at that, but I'm just saying, is something turning, or these are kind of trading off better than expected results?
No, Prashant, you're absolutely right. These days, the overall investment cycles have become very short, and clearly, a lot of the activity is also driven by the hedge fund. So yes, we will see quarter to quarter how things shape up. Currently, there is a recovery. The issue is now post-election, because there will be a big petrol and diesel price hike. There is a impact on the consumption which will happen. There are some sectors which are obviously facing a lot of issues because of gas shortage, and there is the IT sector slowdown which is there. So yes, nothing is buy and forget kind of story. Of course, within FMCG, we do see good compounding stories like Nestle, Pidilite. We are quite positive on Asian Paint, and you're right, even in the retail Titan kind of companies, these are buy and forget kind of stories. But many of the other names, you will always see that there is a question mark next quarter if there is a sharp raw material movement, or there is any other geopolitical. For example, Dabur will see big impact, Imami will see big impact in their Middle East business, which is say 6% of the business, right? So yes, take it quarter to quarter, but there are some compounding names which I already highlighted.
All right, that's interesting. Abneesh, if you look at the consumer sector, you've always had the top tier names, then you had the mid tier names, and then you had some of the bottom tier names. Oftentimes, they stay in those tiers, but a lot of times there are companies that move from the mid tier, go into the top level as well. Say something like a Marico, which has moved itself from the same place as what say Dabur and Imami were a few years ago to now where say HUL is when it comes to multiple and growth as well. Do you see something similar happening for companies that are outperforming for the last few quarters? Say something like a Bajaj Consumer Care. Leadership change happened, and the last 3 quarters have been phenomenal. Do you think there is a valuation re-rating and perhaps the company moving from one tier to the other, which is likely to happen?
Yes, we have a buy on Bajaj Consumer. Stock has massively re-rated in the last 6 months. So always profit booking can happen, especially when crude is up in the last 2 days by around 10%. Their main raw material is LLP. They will need a sharp hike at some stage in the near term. So we'll wait for that hike, but we like the overall turnaround which company has done. Next 2 quarter, very high visibility. Overall GST rate cut in hair oil has helped. Sharp price hike in copra, and now copra is correcting. So margins, at least in the coconut oil business, is taken care of. In almond, they will need a sharp price hike. So yes, again here, next 2 quarter high visibility is there. After that, high base will hit even Bajaj Consumer. So take it one step at a time. Yes, Marico, you're absolutely right. They have shown the transformation through the D2C acquisition, which I think is a template for other domestic consumer companies and some of the multinationals also. So yes, we like Marico a lot because of all this. We expect that copra correction in terms of deflation will help Marico report good margins going ahead also.
Got that. Well, we got a lower start. Abneesh, thank you very much for joining us. It's always a pleasure. 24,130 on the Nifty.